problems that you have it in RTP, the recent RTP and the earlier RTP also. So at least twice, thrice you just go prepared. Okay. Now let us just take up Ind AS 103. This is about business combination. One of the very, very important problem area in the, or I would just say 15 to 20 marks will be there, or even greater also may be a possibility. So do not take up the examination without reading this or without attempting all the questions there. So let me tell you, even in the last session also, we had a crash course batch. I was just telling that this was a problem that they have asked and same problem they have just repeated in the main examination. So it is not a difficult paper. In fact, it is the most scoring paper, but the vastness might put these students to in the back foot. But anyway, people who are clearing are always clearing. So let us not take this as an excuse because it is tough means it is tough for all. We should only make it simple. See, I would just put it like this way. If potato is very hard before cooking, after cooking it is very soft and people take it no. So likewise, you should know how to make it soft. You should know how to make it easy. That means potato need to be cooked extra and a little extra for kids. So likewise, when we are considering ourselves as kids, we should only be cooking extra. That means preparing extra. I would like one of you to read out. Vanessa is not there. She will be prepared to read out. Yes, Pavan, could you read out 103 there?
Yes, sir. Mini Limited is a manufacturing entity in textile industry. Mini Limited decided to reduce the cost of manufacturing by setting up its own power plant for their captive consumption. As per market research report, there was non-operational power plant in nearby area. Hence, it decided to acquire that power plant, which was having capacity of 80 megawatts, along with all entire labor force. This power entity was owned by another entity, Max Limited. Mini Limited approached Max Limited for acquisition of 80 megawatts power plant in the following terms. 1. Mini Limited will seek an independent valuation for determining the fair value of 80 megawatts power plant. Value of other non-current assets acquired and non-current financial liabilities assumed is rupees 11.1 million and 32 million respectively. Consideration agreed between both parties is at rupees 51 million. Both parties agreed to the terms and entered into agreement on 1st April 2001 with immediate effect. Due to unavoidable circumstances, valuation could not be completed by that time. Max Limited finalizes its financial statements for the year ended 31st March 2001. Max Limited's annual financial statements record the fair value of 80 megawatts power plant at 46.9 million, with remaining useful life at 40 years. Max Limited also has license to operate that power plant unrecorded in books. As on 31st March 2001, it has fair value of rupees 5 million. 6 months after acquisition date, Mini Limited received an independent valuation which estimated the fair value of 80 megawatts power plant as 54.9 million. CFO of Mini Limited wants you to work up following aspects of the transaction. Determine whether the transaction should be accounted as asset acquisition or business combination. Calculate goodwill or bargain purchase due to the above acquisition. Pass necessary journal entries in the books of Mini Limited as per Ind AS 103 and prepare balance sheet as a date on acquisition. Determine whether any adjustment is required in case of valuation received subsequent to acquisition. If yes, pass the necessary entries in the books of Mini Limited.
They have given you the balance sheet. Okay. They have given you the balance sheet, and that is the end of the question. See now, 103 business combination. See, what do you mean by a business combination? Business combination in which you should be having two parties minimum, one being acquirer, the other one being acquiree. And the subject matter of the acquisition between the two should be a business. Only then such transaction will be falling under Ind AS 103. So let me repeat. To be attracted to Ind AS 103, you should have two parties minimum, acquirer and acquiree. And the subject matter of acquisition should be a business. only then it will come under 103. Otherwise, it will not be coming under 103. It will be taken up under PPE, possibly. What do you mean by that? I buy an asset. Likewise, I will take up the purchase of another entity as PPE only. Then people would say, no, no, it is not PPE, it is business. What makes the difference between a PPE to business combination? A simple matter only. You should have for a business an input,
process out.
process, and there should be output. So if you are in a position to establish in the deal between the two as input, process, and output were to be seen there, then you consider that as a business activity and you are buying a block of assets and liabilities which are expected to generate profit, and that should be working independently with other existence. It should be independently operating. So here, what are the tests that you have? See, sometimes what will happen is that you may be buying a business, but if the employees are unwilling to join the new entity, then what you bought is only the asset, but not the life belonging to the asset, which is in a way inclusive of labor force. Okay, I will put it like this way. Indigo is thinking of buying SpiceJet. Let's assume Indigo will buy all the assets, all the establishments of SpiceJet, but they can independently operate without the cooperation of the employees of SpiceJet. Would mean I am firing all the past employees of SpiceJet. I am using the existing force of Indigo. Then you do not consider that as a business. You consider that as acquisition of asset. So when you buy the asset, you should also be buying all the force related to that to bring that into a workable profit making independent entity. So here you understand by going through that, as per market research report, there was non-operational power plant in nearby area. Hence, it is decided to acquire the power plant which is having the capacity of 80 megawatts along with all entire labor force. That means what you bought is not only the asset but also the life of the asset. That presence of entire labor force will make that unit workable independently. So what it was considered to be a hospital run by one trust, you just find there is another gentleman who is negotiating with the trust. Trust will move and the new person will be entering into the scene. What he had just got is only a business combination. He is buying all that license. He is buying all the assets. He is purchasing. Not only that, even the running staff also who are responsible, the faculty members, all of them you are buying. So it is only a business combination. It need not be run by a commercial enterprise. It could even be a trust also. Are you understanding, Pavan? Are you understanding?
Yes, sir.
Right. So yesterday we had an what should I say meeting with our sir. He was just narrating us what is the latest happening and all that. It's very open in bringing out the discussion. So now the first part of the question, determine whether the transaction should be accounted as an asset acquisition or business combination. So what is it you should tell? You should tell something about asset means buying asset alone, and where you got to put in labor force, you got to bring out life into it, and that will be covered under Ind AS 16. So if you are buying with the labor force where you have input, process, and the output, then it is business combination, then it will be covered under 103. That is the way you got to tell. It is 103 only. Calculate goodwill bargain purchases due to the above acquisition. Now let us just know about what values that we can assign as on the date of acquisition, because the date is very important. Acquisition date is very important. As when we are talking about, I was just referring about parties and the subject matter. And one more important thing which I did not tell at the very initial stage is the date of acquisition. So purposefully I retained that particular piece of information because that becomes the basic nucleus of question number 2. So therefore, what I did not discuss is retained only for the purpose of better understanding for question number 2. So parties involved, subject matter, date of acquisition are all very important. So the above dates or the dates that they have mentioned, here they said both the parties agreed and entered into an agreement on 1st of April with immediate effect. So date of acquisition is 1st of April. And here is a place where they are giving some excuse. Due to unavoidable circumstances, valuation could not be completed by the time Max Limited finalizes its financial statement for the year ending 31st of March. X1, Max's annual financial statement records the fair value of 80 megawatt at 46.90 million with remaining useful life of 40 years. And they got a license to operate, which is not recorded in the books. As on 31st of March, its fair value is 5 million. 6 months later, they got an independent valuation at 54.90 million. So they are asking us to find out goodwill or bargain purchases. We can do it. This is FR. Question number 1. RTP November 23. So we consider the consideration that they have arrived at. We consider the consideration given in the problem as 41 million. Against which net assets are, they are having other non-current assets. Non-current asset others as 11.10. Then non-current financial liabilities 32. Non-current liabilities. Then they talk something about non-current asset 80 megawatts value 46.9. So this is not independent value. Financial statement records the fair value. This is book value. Not a fair value. Not an independent value. Not an independent value. Then there is an intangible asset. Though not recorded, but it has got a 5 million worth. So you all know that Ind AS 38 prevents an entity to record intangible assets created on its own. So how this would have happened is I am visualizing a scenario. I am just spinning one story. See, let me just tell you something like Deccan Airways, Air Deccan was operating only in domestic sector, even though despite losses, they were operating. And all their routes were 100% occupancy was there because of the pricing. This was a state some 15 years back. And Jet Airways, not Jet Airways, no, not Sagara. Kingfisher came a little later and found that Air Deccan is penetrating and the Kingfisher offered at premium values and they were operating hand to mouth. Premium, but hand to mouth, not having full occupancy. In order to make it profitable, you got to operate outside India. That means you have to have a destination outside India. So only then you have premium growth, and therefore they wanted to apply for the license, and Government of India, that is Civil Aviation Department, said that you should have had 5 years of flying experience. Only then you are eligible for that. So when only 3 years gone, that thereby they got to wait for 2 more years to get the license. Then Vijay Mallya was just having an idea, why not we buy Air Deccan, which crossed 6 years of operation by that point of time, and thereby we can get the license and merge this. Air Deccan did not record this license, which is worth the 5 million. Let us assume like this way. How a company can build intangible asset which is not recorded, but when it is to be sold as a business combination, as a business activity, as how the worth will be there. I'm just giving you an idea as how this will happen. There is no other item of asset or liability that they have left over. You know what is the total there? 11.1 plus 46.9 minus 32 plus 5. So this comes to 31 million. So they have paid more. Thereby there is a goodwill to the extent of 20 million. So they are asking calculate goodwill or bargain purchase due to the above acquisition. Matter over. That's all. Always remember that 6 months after acquisition, they made an independent valuation that came to 54.9 million. So for that, you have separate thing, and 103 is not giving you a hard and fast rule that goodwill should be crystallized at the same value as on the date of acquisition. Say all of a sudden, when you are bringing out this sort of deal, you cannot have the valuation done overnight. If the valuation is done overnight, then people will think that it was manipulated, and therefore you should provide the time. And the time what they have provided in DAS is 1 year. 1 year time that they have provided. See, there is a technical name through which they just call, and I will just report that. Yes, it is there in last one only. Business combination. What is the definition of business? The input, output, and all that we are talking about. No, you just see. You should have output and integrated activities, what you take it up. So just see input, process, and output. These are the terms that you are expected to use. Are you understanding? And one more important thing is that this concentration test, in which you got to tell us whether you are making the payment for the asset or for the business as a whole. So mark example number 1 on concentration test as very important. Reverse acquisition is also a very important one. Please mark this example number 9 as very important. In the process of confirming that, we are bringing out these examples as very important. These problems are to be worked out during that last 1.5 days period or last 2 days period. Okay, please. So we are not just like that searching. I am just trying to bring out those items which are very, very important. Step acquisition is also very important. Contingent consideration is also very important. See, these charts are very, very important. Please understand that. Intangible assets, just now I was just explaining. That is what you just understand in this particular case. Assembled workforce and other items that are not identifiable. This is also a very important area. Goodwill measurement. This is the place at which we are going to take it up as very, very important, where the goodwill that was initially recognized can also be altered on account of a subsequent event, which could be happening within a period. This is what you call it out as what? Measurement period. So now let us just go through this measurement period in this particular case where there can be an increase or decrease in identifiable asset or liability by corresponding effect in goodwill. So exactly this question addressing this measurement period only. Ind AS 103 provides a measurement period window wherein if all the required information is not available on the acquisition date, then the entity will be required to do the purchase price allocation on a provisional basis. During the measurement period, the acquirer should retrospectively adjust the provisional amounts recognized at the acquisition date to reflect new information obtained about facts and circumstances that existed as of the acquisition date and if known would have affected the measurement of the amounts recognized as on that date. During the measurement period, the acquirer also recognizes additional assets or liabilities if new information is obtained about facts and circumstances that existed as of the acquisition date. The measurement period ends as soon as the acquirer receives the information and it was seeking about facts and circumstances that existed as of the acquisition date or learns that more information is not obtainable. That means you can't keep dragging on the measurement period. However, the measurement period shall not exceed 1 year from the acquisition date. This is what I was just referring about. So how much is that time that they have taken in this particular case? 6 months time. The measurement provides the acquirer with a reasonable time to obtain information necessary to identify and measure the following as of the date of acquisition in accordance with the requirements of this NDAS. The identifiable assets acquired, liabilities assumed, and any non-controlling interest in the acquiry. The consideration transferred for the acquiry or the other amount used in measuring goodwill. Even this is also is expected to be undergoing change. In business combination achieved in stages, the equity interest in the acquiree previously held by the acquirer and the resulting goodwill. So please understand the point which I want to tell you is that the measurement period that we are talking about is for 1 year. So now coming back to this, they are asking us to make those changes to 80 megawatt power plant from 46.9 million to a number that being 54.90 million. That means they are increasing the value of PPE by 8 million and thereby there is going to be a drop in the goodwill to the extent of 8 million and instead of 20 million, now it is going to be 12 million. Now let us just see that. So this is on 1st of April. So this particular item will be taken up at 54.90. So now what we are expected to do. So are you clear, all of you? So please just understand that in your examination, they are going to test everything. You should go prepared RTP. You got to study line by line, word by word. Every letter you got to have it done. So you do not know where your luck is lying. So better just to do not, that is better you do not take any chance. Try all the problems and twice, thrice you just do. Automatically under examination conditions, you will be in a better position. You will not have any anxiety and you can coolly handle the same. So pass necessary journal entries in the books of mini and prepare balance sheet as on the date of acquisition. Yes, on the date of acquisition, we can pass a journal entry, determine whether any adjustment is required. So now let us just take up first part of the question is that it is business combination. This is the goodwill and the scheme of journal entries we will be making. Debit what? Debit PPE 80 megawatt at 46.90 only. Debit non-current asset others at 11.10 and debit intangible assets 5 and credit non-current liability 32. 32 and credit purchase consideration payable 50 and debit goodwill 20. Please just check up the totals, please. 82 and 82. 20 plus 46.9 plus 11.1 plus 5. 83 it is. Hey, how
Consideration
come?
is 51, sir.
Oh, 51 now. Right. So this is the scheme of journal entry that we have got to pass. And let us assume that purchase consideration payable debit 51 credit. Let's look at as how the consideration is payable. Is there any indication given in the problem that they are giving it in the form of equity shares? Let us assume that they are going in for equity shares. So equity share capital 51. Because of this, how the journal entry we are, sorry, how we are preparing balance sheet. Now let us just see that. Oh, prepare balance sheet as on the date of acquisition. They have not given us any information. No, now only they are giving the balance sheet for Mini Limited. Let me see. Okay. Or and the date of acquisition. See, they should have given the balance sheet common, which they did not do. Balance sheet as on the date of acquisition 14x1. PPE non-current assets PPE 2158 80 megawatt 46.90. Then capital WEP capital WEP 12 deferred tax asset 324 others 25 and from this is the top mini. So from maxi 11.10 36.10. Then Intangible goodwill 20. See, too many items. So they should have tested something better. Anyway, you will just take up 2204.9 plus 12 plus 324 plus 36.1 plus 20.
Other
2597.
intangible asset is also there, sir, acquired through licensing, 5 million. They are
There,
acquiring from Max Limited.
yeah, that's there. Intangible asset you have 5. So plus 5. 2602. You are right. So then these are all too much of an information. So for saving time, current assets, I am taking it up straight away 1580. Correct. So here I am lazy. So lazy, I am taking up 1580 directly. Correct. What will be the total value of assets plus 1580? 4182. For liability's sake, don't write lazy under examination condition. So here I am just telling, I just don't want to proceed further.
Sir, total
I'll see
non-current assets, I think it's 2302.
2302.
Sorry, sir, I made a mistake. And deferred assets. Correct, sir, 2602.
So equity share capital 295, 295 plus 51. I consider that they are paying 295 plus 51, 346. Then other equity components, other equity, they are all 717 plus 2481. 717 plus 2481. 3198. Non-current liability mini and maxi, which is 268, and in the journal entry 32, 300. So total current liability is 338. Current liabilities. Here also I will consider myself as lazy, but you don't be lazy. $346 plus 3198 plus 300 plus 338. 4182. This is the answer. There is solution for item number C. Then comes determine whether any adjustment is required in valuation received subsequent to acquisition. If yes, pass the necessary entries in the books of mini limited. Yes, we will do that. So D part is like this way. Goodwill initially recognized was 20. Less PPE from 56.90 minus 40, 54.90 minus 46.90. 8 I got to reduce. I got to increase it in PPE. So now it is going to be 12. So PPE 80 megawatts, which was 46.90. Now that fair value increase on account of independent valuation that being 8. This becomes 54.90. But the problem is that we are expected to charge depreciation for this. And only for that, the information is so relevant that 40 years period they are talking about. 40 years period they are talking about. So 8 is this is additional depreciation we want. But in any case, 46.90 will be subjected to depreciation for 40 years period. So only for 8, they would not have done 8 divided by 40 into 0.5. 8 divided by 40 into 0.5. That means 0.10 is going to be the additional depreciation that you got to take up. So therefore, it is going to be 54.80. So what exactly is the question that they've asked? Determine any adjustment is required. Yes. So what adjustment we are expected to do? So here PPE increase, we should make it out of 8 for increase in fair value. PPE 0.1 I got to reduce on account of additional depreciation. Goodwill I got to reduce by 8. Am I right? With that, the first part of the question is over. I mean, first question is over, not first part. First question is getting over. Now let us just go through the solution, what they have just drawn. Today we will stop after doing this first problem because that is taking more time. And some match is going on. So acquirer, acquiree and acquisition date, and they are generating. Here they have not used the term input, output and all that, but it is a business purchase only, business combination only. So hence transaction will be considered as business combination is what they have mentioned. So calculation of goodwill 20. So journal entries for that particular sake 20 and liabilities assumed to bank. They have not issued equity capital where they have given money. So to that extent, there is going to be a change in bank balance. Here property, plant and equipment 2204.90. 2204.90. So intangible asset, capital, work in progress, all that 2602 is for PPE. For all other items, total assets 4131. Because of the capital we have taken up, whereas they have paid in the form of cash. Because they are not mentioned, so therefore we have taken up like that. So is that clear? So now the second part is going to be measurement period that you have subsequent accounting. So it's not available on that. This we have read from the institute study material. Remember that changes that we have made, the carrying amount of the goodwill is decreased by 8 million. Depreciation will be increased by 0.1. And these are the changes that we are expected to have as a disclosure. And with that, solution to question number 1 is getting over. Is that right? Are you clear? Mark it out as very important. Is that clear? All of you, please say yes or no.
Yes, sir.
Yes, sir.
Sir, here the depreciation adjustment is only for that period of 6 months only.
Correct. After the revaluation period, valuation is getting over, then you got to charge depreciation on the revised figure.
Okay.
For the first 6 months period, you never dreamt that it is going to be 8, and therefore, when dreaming is not there, depreciation on that figure will also be not there. Once cloud is clear, then you have got to apply it only on the figure that they have agreed upon.
Understood.
Right. How about others? So who are all there?
Sir,
Yes,
sir,
Shivagami Sundari.
your
Yes,
notes,
tell.
please, sir. Your notes, please, sir. 1 second. Your notes, please, sir. 1 second. Your notes. Your
You
notes,
want that?
sir.
You want to take note of that?
Yeah. Yes, last one, sir.
Last one. See, here is a place where I wanted to make a small statement. I mean, Venkatraj was insisting that we should do certain things right at the very initial stage when preparation is on. That's what we have got to study. So that for that I will spend 5 minutes. So you please just develop that. In fact, for some of my personal agenda, I'm just doing that. Fortunately, our friend had just given 4 notebooks and some pen, and I started doing it. Hmm? So that's all mega books. But what I suggest, I'll tell you, I've seen some of the successful students. It's not that I've just developed it. Some of the students have just developed it like this way. Point number one, if it were to be a problem subject like your SFM or FR, if there were to be a formula that you are having, just develop a formula notebook. Formula notebook. So it could be of a small size. So maybe 40 pages, you start working out in your preparation itself. When you are bringing out a new formula, better you incorporate that formula there. Because in your notebook, where you have written the formula, you will not know. At the time when you are preparing for your examination, where you have to remember the formula, where would you search? Just now, I was just searching in your, that is in the institute study material, where exactly that measurement period is there. I don't have any problem as far as time is concerned. So therefore, I have the luxury of searching it, but you don't have. So therefore, develop one particular 40 pages notebook for formula. Is that possible or is it necessary to do it now? Why? What is the problem? Do it now. So say whether I should remember all this and do it. No, no, can just go through first page of your notebook, whether you have written any formula. No means skip. So hardly you would have just done 250, 300 pages. So in that there is going to be 20, 30 pages on which 1 or 2 formula will be there. All that it is not going to take 5, 10 pages in your 40 pages. Correct? Formula. Let that formula book is for one. I mean, one formula book only. That 40 pages, remaining 30 pages will be a waste is what you will be thinking. No. You take it up for FR, you take it up for SFM, SEMPE, or if there were to be any template that you got to have, template. Please just have it done and templates may be changed from one type of problem to another type of problem, make those. And there in the formula notebook, you just make a note in which problems you are using that formula so that this is going to navigate you, take it to that particular variations. So you will have different variants, no? In formula itself, you have different variants. There you make note in which question number you have. So formula, in which question you have applied. So that is going to be an index for you to check up as which formula. It is not that formula alone remembering will enable you to work very hard. No, let me tell you, in CA intermediate, bivariate data formula I remembered, but under examination condition, I did not know what to do with A1, A2 and A3. Which one is A1, which one is A2, which one is A3, I do not know. So there I just felt that I did not had adequate practice for this formula. Formula is one thing, remembering it one thing, and connecting it with the problem and practicing it is very important. So therefore, you need to have a formula notebook, and there do not note simply the formula. Also note down, say there could be a formula KE is equal to D1 divided by P naught plus G. So you can say in chapter number 3, you are having problem number 14, 11, 17, and 20. You make a note 20 is so important. So with put a mark this way, that means when I have urgency, I should know I should work out this problem by 20. So 4, 11 and 17 are only the problems where I'm using. But if I use 20, that means it is as good as solving 4, 11 and 17. So this way you should have the indicator or a navigator formula book. Then formula should have templates. Templates. And in some of the classes, I would have just referred, please mark it out with 5-star, 7-star and all that. So those 7-star remarks that I'm making are very, very important. In the formula book itself, you should develop one column. These are all compulsory problems that you got to do. In whichever chapter, chapter number 1, you need to have problem number 5, 7, 11 and 23. That means you have to solve this problem compulsorily. That 40 pages will enable you to take it up. So one more thing, there is always a chance that you may lose that. So put it in the cloud. Put it in the cloud, and you always have that feel that you may lose information and it is permanently lost. No, you take photos of that. It is going to be small in number. Put it in your Gmail or in the draft where password has got to be remembered. So please do that. So this formula notebook, 40 pages notebook is going to be writing your success. So what to study in the last 1.5 days and 2 days should come only from here and nothing else. Derivation, formula, or if derivation is not there. So if Black-Scholes model is there, 12 formula, 12 steps I have, 13th step I'm just giving. In which particular problem there is one two-tail test, single test, left tail, right tail and all that I would have given. So note down that particular problem. You got to solve it compulsorily. Template, formula, and in that 40 pages, you should remember that. Yeah, that is going to be the case. That is the success. This I have learned it from a student in Ernakulam, and she was just making a note. I was asking, what is that? She was just saying, sir, this is the way I just do it for my school times. In fact, she had quit her NIT Kozhikode after 2 years of pursuing and took up CA Foundation and cleared in the very first attempt within the articles period. We got to learn basically from all people. I never take it up that I am sir, so I should not be learning. No. So I have to borrow that. Mani sir had just developed Ind AS 23 borrowing cost for which he had given one story. I have borrowed it. I stolen it, I should say. So likewise, this 40 pages notebook in which you make note, 40 pages means it is not exactly 40 pages. You can have any number of pages. If you feel that the volume is going to be big, you can have a bigger thing. But you should always be living along with that. Like Karna is having Kavacha Kundala, you should also be having that. Okay. So with that, we will just put an end for theory also, which are all areas that you got to note down the theory. So I will tell you in the formula book itself, you can just make note. I can give you the example in this fashion. Just look into that. So for SFM, so this is the area. Startup finance is very important for theory. So if I take up startup finance, hardly it is going to have how many pages? 15 pages. In that, I will prepare clearly this for these two. And the answers they have just referred para number 2 and para number 3. Para number 2 and para number 3 I got to read compulsorily. Para number 2 and para number 3. I will better note down personal financing, personal credit notes, family and friends, peer-to-peer, crowdfunding, and write twice, thrice before going to the examination. Today I just got like that for some other purpose from my younger brother. I have just said I will put it in the cloud. I do not know where I will be losing. I will put it in the cloud. Whether I'm just taking up here or elsewhere for the purpose of one assignment, I can as well look into the cloud and then take it up. So for theory, it is like that. So then what other chapters are, which are very important for your theory? I would just say risk management, financial policy, and securitization. These are all 100% Agmark theory question. take it up from your past RTPs and book back questions. Prepare and go for that. Definitely you will get it. Definitely you will get it. And you should not be scoring less than 90. Less than 90 is an insult. 98 is the maximum marks scored by a student in SFM, 99 in FR. These are all marks which were benchmarked by our past students. All your seniors have given this mark, benchmark. If anybody who can score more than 98 in SFM, I will give one gold coin. Distant education or face to face, I will give one gold coin. What is a gram? Don't ask me now. One gold coin I will give. I have given that. More than 99, if you score on FR, I will give one gold coin. Okay. So with that, we will just put an end. Let us just enjoy cricket times also. Thank you.
Thank you.